What we're looking for is a relative strength index below 30 or near 30. See, if you understand this oscillator, you understand that below 30 is oversold and above 70 is overbought. We're looking for stocks that are oversold. Good small caps, companies we know that have a business model that could be big in the future. Majesco Entertainment is such a company. All right? So oversold below 30 is where we start to pay attention. When it's approaching that 30 line, we definitely want to be looking close. On this chart, you can clearly see that when the relative strength index is at or near or below the 30 line, it often produces a big bounce shortly thereafter. This is the last 12 months, and we will use 12 months on every chart we talk about. So if we look at those lines, and if we circle the bottom, we can see a low relative strength index reading. And now I won't do this on every chart, but I wanted to start with Majesco because it trades off of that very nicely. We're swing trading and day trading, okay? And these are great chart patterns for you to know and then apply to either your swing trades or your day trades because they're very consistent. The thing is, a stock can be oversold for a long period of time. If there aren't buyers, then it won't bounce. All right? Just because it's oversold doesn't mean it's coming back up the chart. So what I look for are charts that have a history of bouncing after a sell-off. 50 cents, $1, $2 per share, that's what I like to see. Look at this bounce right here from the 230s up to the 450s. 10,000 shares at the bottom is a lot of money up here. Okay? A lot of money. $20,000 in a couple of weeks' time. 10,000 shares down here. $1 per share, no problem. You won't capture the full bottom and top. Right? You won't capture the full run, but even a portion of that. Usually I'm looking for 50 cents. If I can get 50 cents and I have 5,000 shares, it's $2,500. I'm only trying to make $50,000 to $100,000 a year utilizing this strategy. So look at the relative strength down in here. See that? So we're looking for a stock that has pulled back, and my entry usually works off of the previous day's low. So what I do day after day after day is I watch the previous day's low, and I might test entry if it opens higher than the previous day's low, because I have a tight stop then. See, if it puts in a bottom, like 161 here, and it opens higher, there's a good chance the reversal is on. Why would the reversal be on? Well, because it just fell from $4.53 down to $1.61. The morning it opens higher, it could stick and never go lower, and it has not. However, we need to note that in this situation, it starts to bounce at 247, but look, it's not oversold yet. Candle over candle, meaning this candle here is higher than this candle, but it doesn't stick and it heads lower. The good thing is if you entered here around, let's say, 260, and it goes lower, you stop when it goes below the recent low. And that's how I position on these oversold trades. So you can get in if you think it may have bottomed out, but if it goes lower, you have a tight stop loss. That's why oversold is my favorite. And now it washes another $1 per share or just under. And then you get the candle over candle here, and 180 is your entry. Okay? And if it goes below 160, you're stopping out. Sooner or later, these good small caps are going to attract big money off the bottom. And you know that a lot of short sellers need to buy their shares back. So when you get that first day that it starts to head higher, you can assume short sellers. Put yourself in the mentality, the mind of a short seller. They sold the stock short and they're up big. When they see it start to go higher, they need to buy their shares back to lock in their profit. That adds buyers to the equation. Companies know that, so they start to release press releases and try and catch short sellers off guard. And our job is to position before all of that happens, to test the bottom. So if I get rid of all of these lines, and we just talk about the candle over the candle, you can see here it puts in a bottom at 197. The next day, it opens right there, higher than the previous day's close. That is what I call candle over candle. It's a confirmation signal that the buyers might be taking control. All right, so we're looking for hammers. We're looking for bullish engulfing candles off the bottom. We're looking for a candle over candle pattern. And that is usually where I enter. Or if I think I have timed the bottom properly, I might enter the day that it's bottoming. For example, here. As it comes off the bottom at 161, I might pick it up at 165, and if it goes lower, then I stop out at 161 for a 4, 5, 6 cent per share loss. The upside here was $1. So 6 cent loss for an upside of $1. And we've traded this one over and over and over. So you're looking for a relative strength reading below the 30 line. Now this just does not work on one stock. All right, this works on all good small caps. So let's go through some of them. I'm not going to annotate anymore. I'm going to speed up the process because you know that below 30 is what we're looking for. When the panic selling is over, the big money will come in and buy at a discount. All right? Everybody loves to buy a Mercedes when it's on sale. And rich people buy sales too. Big money is looking for discounts and good small caps. Good small caps can produce the biggest profits. So companies like Zag and Majesco Entertainment. All right? These guys, they make the covers for the iPads and the iPhones. All right? They've done a number of acquisitions. Their products are in Best Buy.